Hi there, welcome to Markets Tomorrow right here on 18 on the Mumbai News Centre. I'm Tanveer Gill and talk about the trades in the session today. And you really had a late hour rally that helped the market close just shy of 77.50 on adjustment. But there was a bit of a rebound in works ahead of expiry day, which is slated for Thursday. Stepping into penultimate day to expiry, the market is seeming like, there is a little more upside to go that the market can capture. But it's inconclusive, so remains to be seen given global cues how we trade tomorrow. However, we will talk about the market session and also the outlook for the global economy going forward with our expert panel of guests. We have Lord Jim O'Neill, Commercial Secretary, UK Treasury, outlining how India is entering into a sweet spot compared to China. Anand Tandon, independent analyst, will put the India story in perspective and really talk about the individual movers in the session and also the stock stories that we highlighted. Sacchitanand Uttekar will help our viewers with strategies to approach trade tomorrow. But really, a quick run through on the top stories coming in from the markets. And the Nifty rallied in the last hour to close just shy of the 77.50 mark. Not just that, in terms of earnings, Tech Mahindra came out with a set of numbers post-market close, which were in line with estimates on the top line, on the EBITDA level, as well as the bottom line, on adjustment of the forex gain, as well as a lower tax payment. The number on the bottom line was pretty much as per street expectations, and also cash flows reviving for the business, standing at about 5,200 crores. Added to that, the company declaring a special dividend of 12 rupees per share is perhaps something that investors would take on board quite positively. The other stock story was really the Centre for Science and Environment, talking about how there is a threat of bread containing components that can add or result in cancer. And that really was a scare that sent stocks like Jubilant Foodworks as well as Britannia into a bit of a tizzy. In fact, Jubilant Foodworks on close recovered from the day's low, so it tanked about 10%, but then recovered to close low by about 4% only. Westlife also slumped on the CSE report. But the Food Administration in India contradicted the CSE red flag, so that debate pretty much carried on and influenced a lot of the consumption-oriented themes, the FMCG stocks in the session today, especially food-related stories. Just Dial also fell on the back of a cautious guidance, so that was another stock which was in focus. Most brokerages were sounding bearish on the prospects of Just Dial going forward. And critically, to my mind, VRL Logistics failed to convince investors why they should be getting into the aviation sector. So at close, locked in circuit, locked at lower circuit, down 20% is how VRL Logistics wrapped up the session. In fact, that knee-jerk reaction, it couldn't quite recover from there despite the management clarification. The question that we are asking then, stepping into expiry day, is that will the Nifty expire below 7,700, or will we see stepping into expiry session a bit of a rebound that can take the index past 7,800 on the Nifty, that is. Good evening to Anand as well as Sacchitanand Uttekar. Really appreciate both of you joining us today. But Anand, let me start off with you. We are entering a month where there are two important global risks in the Brexit vote as well as the Fed meeting. How do you think expiry this series would happen? Around what levels?
Is that for me?
That's right, Anand.
Well, I mean, I wouldn't hazard a guess as to where the expiry would happen. I would imagine that the market is not going to let go very easily. As you have seen today, there is an attempt to try and keep it at this level or a little higher. I can't really hazard a guess as to the level at which it will. But as you mentioned, going forward, there are a couple of global issues, and I guess that is one of the reasons why the market is seeming a little nervous. The earnings season, thankfully, has not been as bad. At least it appears that the broader market has some interesting companies to look out for, and results for outside the index companies have been quite encouraging in the most part. So to that extent, there will be some floor on the market as well.
Okay. Suffice to say, you would not specify levels, but you'd be cautious on the market at large. Let's talk about the stock stories today. First, a quick view on Tech Mahindra's earnings. Did you think that, the cash position, the dividend payout, pretty much compensated for a set of numbers that were in line with estimates?
Well, it is the cheapest stock in the frontline companies, among the frontline IT companies, and we've been waiting for growth to resume. So far, at least the results don't hold out much in terms of any surprise. One has to wait to see what the management talks about the analyst meet to figure out whether or not they are seeing greater traction. The telecom vertical obviously will be crucial. And so far, one has taken guidance from what, for example, TCS and the others have said, and they have been somewhat discouraging. But if Tech Mahindra actually gets its act together and starts to grow, then it's clearly the cheapest and the most, probably the least held stock among the large cap companies, and therefore can give you significant upside.
Okay, how did you take to the CSC report that there is a cancer threat from bread and the reaction that it brought for food companies such as Jubilant Foodworks, for that matter, the biscuit major Britannia?
Well, I think most of these. There is a cancer threat if you're alive, right? I mean, there has to be a perspective within which we have to take some of these reports. Obviously, we do not know everything that is carcinogenic, and we do not know at what level and what triggers it. That said, obviously, you don't want to be having contaminated food, which increases the problems. But I don't think that picking up any one element in particular and highlighting that, unless it is proven to be extremely dangerous, will go any distance. Besides, we've seen that the food administrative agencies have actually said that they don't plan to ban it yet, and it is not as if it is banned in other countries as well. So I think we will, the market will continue to live with it. There are worse things. I mean, colas, for example, I think are likely to cause you much more greater harm than bread will, but they continue to grow and sell.
Also smoking, right? Everybody knows the risk there, but people continue to smoke. I just want to bring up the clarification that the management of Jubilant Foodworks issued on the back of this news, which also in a lot of ways consoled investors that things are not as bad as they look. They have adhered to the highest quality standards and the laws laid out by the Indian Food Administration. Only use additives, ingredients that are approved by the FSSAI in all our preparations. So that was a clarification that perhaps I think helped the stock recover from the day's low. It actually closed down, covering 50% of the lost ground, so closed down about 5%. Having said that, the other story of the day was really VRL Logistics. And how did you look at the drama that played out? Do you think the management could have been a little more transparent and perhaps should have been a bit more prepared with their game plan and the details that they could share with investors while making this announcement that would, rest concerns on why they would be looking to dilute stake over the next 3 years, and perhaps even put a number to the extent of the dilution? Anand?
Well, there are two ways of looking at it. One, they have clearly stated that the listed company is not going to be involved. So I think if they've decided to sell off some shares, at best one can look at it as a signal value to say that they think that this is reasonably priced, a good price to sell and get into another business which they believe, for whatever reason, is a higher growth segment. So, at best the signal you can take away is that, the growth here will be slower than in any other business that they want to do, and shareholders should adjust accordingly. The second issue is, I think, one of ego. And that is where the management, I think, has slipped up in terms of the way they responded, saying they didn't particularly care for minority shareholders. I think that is more to do with the fact that, English is a foreign language, and we tend to not be very careful about the choice of words. So I wouldn't put too much store by that. That said, it does tell you that the mindset of Indian promoters in general, and I'm not only restricting to this particular company, continues to be that it is my company. And the fact that it is listed doesn't mean much, and the minority shareholders better take whatever they get out from us. So that is a problem for the entire Indian capital markets, and that is the reason why we will continue to have problems with companies which don't understand the value of minority shareholders and the fact that they have a responsibility towards those listed ones. Purely from the point of view of performance, nothing should change, except for the fact that, if the company then goes out and gives guarantees or such like to the unlisted entity, then we will have a problem. And I think that is where the minority shareholders need to be particularly vigilant.
But what if they say that, we could not even say, but in terms of their actions, talk about 5 to 10% dilution, which brings down their stake from 70 to either 65, 60% over the course of the next 3 years to fuel a business which is open for debate, right? Some people may believe in the aviation story, some people may not, and they're getting into the regional aviation sector, which I think is an interesting opportunity to evaluate. But if part of that funding will come in from stake dilution or VRL logistics, as a minority investor, how would you, not that you are an investor, but, what would your advice be to minority shareholders looking at the story then?
So as I said, the only signal you can take away is that the promoter believes or the key shareholder believes that the other business is more attractive. On the other hand, you could also argue, and which is what the management has been arguing, that it is their passion and it's not so much the economics. Either which ways, like I said, they are still going to hold a very large stake in the existing company and the company continues to grow. If you are a genuinely a good promoter and you do not intend to siphon out money, what else can you do but to sell the one asset that you have, bring down your stake in that and use that to seed the next investment? I mean, they could also have done it by silently siphoning out money from one into the other, but that would have been greater pain, would have been cause for much more concern, I would think. So at one level, other than the signaling effect of saying that, okay, they think the one business is better than the other, I don't think that, just per se having sold off some stake is something that one should be particularly concerned about.
Okay, so just a final thought on this story. You do not see more downside. This knee-jerk reaction of 20% lower circuit is perhaps pretty much how low the stock goes from here?
Well, I wouldn't say that. I think most logistics companies are grossly overpriced. But then, the assumption being made is that the GST bill will create a lot of business opportunities. I don't see where the operating leverage will come from, but maybe there is something there which I'm not able to see. But for the particular reason of having sold the shares, I would think that, this is perhaps too much of a reaction.
Fair enough. We'll take a short break then. Sacchitanand Uttekar also joins in and we'll get some strategies from him also on how to approach trade tomorrow. As we take that break, hear out to Commercial Secretary to the UK Treasury, Lord Jim O'Neill, talk about how he views the BRIC story as it is right now and India's standout position within the BRIC nations.
I think this is a really important time for India. The things that were behind the whole BRICS concept were demographics and productivity. Pretty simple things, frankly. India's now, on a relative basis, entering a sweet spot compared to China. In that India's demographic profile over the next 15 to 20 years gets better and better, where China's has started to deteriorate. And so, in principle, it's a lot easier for India to grow by a bigger rate than China going forward. Whether that will actually happen or not depends on many things that India needs to do to boost its productivity. I think there's been a shift to the positive that primarily took place in the early days of the Modi administration coming into existence. And that therefore, and along with the evidence that India is seemingly growing by between 7 and 8%, the answer is yes, people have become more optimistic. Where there remains many questions is whether India can actually turn that into something that happens for the next 2 decades, or perhaps even, if it really gets its productivity rate boosted, perhaps even stronger rates of growth. And we'll have to see what happens going forward in terms of policy.
Welcome back. You're still watching Markets Tomorrow right here on 18 Now. Let's talk about earnings. LNT comes out with numbers. Avan joins us with the estimates. Avan?
Well, it's expected to be an okay quarter for LNT. The top line growth is seen at 28,180 crores, while the profits are seen muted at about 1,923 crore rupees, largely on account of the lower project announcements, as well as a higher interest expense and higher finance costs, which may eat into the profits. The infrastructure revenue growth could be strong and aid the revenues this time around. Margins also are seen muted on account of the execution challenges, except for the infrastructure sector, seen at about 13.2% versus 12.9%. What's also going to be very important is the timeline of the guidance, whereas at the start of FY15 they had projected a revenue of 15% and order inflow of 15%. In the second quarter they cut the order inflow guidance to 5 to 7% and revenue guidance to 10 to 15%, and then in the third quarter it was cut to about 0% for the order inflows. So which would mean that we would need orders to the tune of 61,800 crore rupees to meet the guidance of about 1.5 lakh crore rupees, given that in the first 9 months they've had an order inflow of about 93,500 crores. So that would be important to monitor as well. Look out for good performance in the infra segment, weak industrial demand, which will result in flat demand as well for the E&A segment, and the development project segment will also be important to monitor.
Thanks, Avan, for that. Yatin joins in to talk about Bajaj Auto's earnings. Yatin?
The street is expecting a strong fourth quarter for Bajaj Auto on the back of almost 12% volume growth that we saw in Q4 for Bajaj Auto. If you look at the revenues, we are expecting a 12% growth there. Absolute EBITDA also, we are expecting a 34% growth. Profits seen at 815 crores. That will show a strong growth of 31% year on year. Margins also would see some improvement. We are expecting margins to the tune of 21.2% versus a figure of 17% year on year. Of course, realizations are expected to remain under pressure given the fact that the export markets and the currency fluctuation, that business segment might impact the overall operating performance, and also a weak product mix could be eating into the margins. But clearly lower commodity cost is a silver lining, because of which the margins are seen to be expanding on a year-on-year basis. Of course, the key issue to watch out for will be the new launch responses and what is the outlook when it comes to FY17 export markets as well as the domestic market growth, and especially the management clarification required on the market share trends that they are looking at, especially in the premium bike segment.
Thanks, Yatin, for that. Sacchitanand, come to you on both these stocks, LNT and Bajaj Auto.
Well, if you look at LNT, we have largely seen the major move in this particular counter, and right now what we are expecting is this particular correction to continue. We expect a mere broad range in this counter around 1180 could be a very good support for the stock, and on the higher side 1340 where the 200-day moving average is placed, we expect some kind of supply getting created there. So we expect a range bound kind of an activity going forward in this particular counter. In terms of Bajaj Auto, yes, we are bullish on the entire auto space. We have the stock again quoting near its 200-day moving average, and if you look at the overall structure, what we are quantifying this particular move is as a correction. So we expect a rebound back to the levels of around 2600 or so, and it seems to be in a very good place where reversal can take place soon.
Right. The other stock story of the day was Aurobindo Pharma, and if you could just tie in your view on Aurobindo Pharma with your view also on Jubilant Foodworks, which actually recovered from the day's lows quite handsomely.
Well, the entire pharma space is under pressure. In fact, Aurobindo was outperforming this particular space for some time, and the recent decline that we have seen is coming as a very good surprise. If you look at the overall structure, what we are seeing on the weekly scale is a major breakdown. What we expect the stock is to show some follow-up move or momentum in the coming days. We expect the stock to decline towards the level of around 680 or so. So we are not really bullish on this particular counter. In fact, most of the pharma stocks are showing signs of weakness, and we expect the underperformance to continue in the pharma space.
Sacchitanand, how would you look at my other, actually, I don't know whether you tied in your view on Jubilant Foodworks. Is that a story that you would still believe?
Jubilant, yes, we have seen a good recovery in today's session despite the fall. But if you look at the overall structure, the stock has been trending down. We still don't have much evidence to conclude a bottom, so we expect this particular move to continue on the lower side.
Your stock ideas, your stock strategies for tomorrow, Sacchitanand?
Well, we expect markets to trend higher. We expect this particular support of around 7700 to be held on. We expect the markets to rebound back about 7820, 7840 kind of levels, and that's why we are coming up with 3 buy recommendations. The first one being Bharti Airtel, wherein we have seen a steady decline so far. We have a tri-star kind of a pattern getting developed at the retracement support. So we expect a rebound in this particular counter. We expect a target of around 355, and the stop loss can be placed around 340. The second buy idea is on HUL, wherein we have seen a significant reversal after a steady decline. We have a bullish Harami kind of a pattern. A stop loss can be placed around 814, and we expect a rebound back to 840 levels. The third stock is from the auto space. We have been bullish on the two-wheeler pack, and Hero MotoCorp is one of our favorites. We have seen a good consolidation here, hammer pattern a couple of weeks back. Again, reconfirmed this support at around 2830. So with that stop loss in mind, we expect a rebound back to 3000, 3030 levels.
Okay. Anand, before we wrap up, your one big bet theme-wise that can perhaps still give a favorable risk reward at this point to investors post this earnings season?
Well, there are many smaller companies which I think are interesting. The auto ancillary pack among the smaller ones has done very well. The man-made fiber business seems to have done exceedingly well. And I think the BPO space among the IT companies have done quite well. There are many companies there one can choose from.
All right, Anand as well as Sacchitanand, thanks very much both of you for joining us and making sense of the markets, helping our viewers to approach trade tomorrow. The view is a bit cautious at these levels given the volatility that the markets witnessed today and what is expected to transpire over the course of the next 2 sessions, really leading to expiry of the May series with 2 big event risks in the Brexit vote as well as the Fed meeting, likely to influence trading sentiment in the month of June. We wrap it up on Markets Tomorrow. Thanks very much for watching the show. We'll catch you with the markets as always from morning at 8 a.m.